Ladies and gentlemen, there are some that saying this recession is going to come sooner than 2020, and this is a global recession. So I looked at another article today, and I might do it a little later. It's actually kind of funny. Trump is trying to blame fake news for the upcoming recession. So he's saying if there is a recession, it's the mainstream media's fault and their fake news. I can go with that, Trump, but I would have a different twist to it. I blame you and the fake news, mainstream media, because to me, both of you are incompetent. But this came out on CNN, August 16th, 2019. I'm going to go ahead and play the video.
What on earth is going on in the bond markets, and what exactly do we mean when we say that trillions of dollars worth of bonds are trading with negative yields? Honestly, it's pretty complicated, but there is a basic rule to remember. When bond prices go up, the yield, or the return the buyer earns on that bond, goes down. Bond prices up, yields down. Now, a government or a company issues a bond because they want to borrow money. An investor buys the bond, gives the government cash, and in return gets paid a fixed sum of money, interest, every year. Now, at the end of the life of the bond, the government then gives all that cash back, 100% of the money they initially borrowed. We call that capital protected. The interest the government pays is pretty low right now, but generally it pays better than keeping the cash in a savings account, for example. Now, bond prices spike higher when investors get nervous and turn to what we call safe havens. The question is, why are government bonds seen as safe assets? Well, the belief is that if all else fails, a sovereign nation like the United States will still honor its commitment. But since the financial crisis, something unique has been occurring. Two things, in fact, have been driving bond prices up and therefore yields down. Number one, ordinary investors are not the only ones who've been buying bonds. Central banks like the Bank of Japan, the Eurozone, and the Federal Reserve Central Bank have all been buying too. Now, number two, central banks have been cutting interest rates as well. Over in places like the Eurozone, Switzerland, Japan, just to name a few, central banks have cut rates to zero and then kept cutting all the way into negative territory to try and help support their economies. In a nutshell, what has that done? It means lots of bonds around the world are trading with negative interest rates or yields. This means the buyer of a bond today with a negative interest rate is effectively paying global governments and or companies for the privilege of lending the money. Sounds crazy? Yep, it's pretty crazy. And that's what the world looks like today, to the tune of multiple trillions of dollars worth of bonds. The question is, why should we care? Well, for one, we don't know where this ends. While low rates are good for borrowers, low rates are bad for savers. Longer term, low rates make it harder for money managers like big pension funds to earn cash. Therefore, they're forced to buy riskier products, putting our future retirement money at greater risk.
Okay. Okay, ladies and gentlemen, let's get back to the story right here. Here we go. Now, they are now saying a global recession may become a lot sooner than anyone thought. And I saw that negative interest rate when it comes down to mortgages now, because, the market is not doing so well. So on Tuesday, equity markets across the globe jumped at the news that Trump administration would delay some of the tariffs. But remember, he's starting up the tariffs in September. So it turns out trade wars are not easy to win, and the global growth picture is not looking good. Last week, the UK announced negative GDP growth in the past quarter. This week, it's Germany announcing shrinking GDP, with its 10-year bond hitting a record negative 0.62% yield. Then there's Europe seeing negative industrial production, and China announcing its lowest industrial production growth in 17 years. The collapse in global bond yields has been a theme since October of last year, with a 10-year U.S. Treasury bond dropping to 1.6% from their October 2018 high of 3.23%. Now that the 2-year, 10-year Treasury yield curve has inverted, the recession alarms bells are ringing. Why? Because every single recession in the past 45 years has seen a yield curve inversion preceded. Ladies and gentlemen, there are some people that believe we are already in that recession. There are some that already believe it. So, is it far-fetched? No. But it is definitely anticipated for 2020. And of course, with the trade war, this is why people on Wall Street are telling Trump to back off of all of those tariffs that he's about to put on China in September. And then he's waiting again until December to do even more tariffs. And the only reason why he's waiting until December is because he doesn't want, there to be any disruptions in imports around Christmas time. So no matter how you look at it, many people definitely feel this recession is going to happen. History suggests on average a recession begins 22 months after a yield curve inversion, which we have already gone through. If you paid attention to the video, we've already gone through a yield curve inversion. We already went through it. It's not until 18 months after the inversion that the stock market turns negative. Yet Bank of America Merrill Lynch numbers indicate that we have less time for the 10 yield curve inversion. Since 1956, the S&P 500 peaked within approximately 3 months of the inversion 6 times. Following the other 4, the S&P 500 took 11 to 22 months to peak. 22 months of growth versus 3 months. That's quite a big gap. Both of these historically studies suggest that there is room for markets to make new heights in the next few months. In fact, one can imagine several scenarios on how these new highs could come out. Well, that's all they are scenarios, ladies and gentlemen, But please tell me what you think. I really believe we are in the preliminary stages of a recession. And because this is a global recession that's coming up, this is why they said the impact of this recession is going to be far worse than the previous ones that we have seen. And ladies and gentlemen, I don't know if America's going to be able to pick itself up when it never even fully recovered from the recession back in 2008. People did not fully recover from that last recession. And now we're going into one that's global, and they're already telling people to prepare yourself. This one is going to be really bad. So, ladies and gentlemen, just keep saving your money and try to, keep yourself on a good budget, one that you can manage, and don't overspend. because you're going to need as much of your revenue as possible, especially with 2020 coming. I know it's going to get worse. It's definitely going to get worse. You have a lot of reckless people running this country. And that being said, ladies and gentlemen, you are bound to see some pretty treacherous things that are about to happen to America. Please leave your comment and subscribe. Don't forget to hit on the notification bell, and I'll see you on the next video. Peace, family.